Hello, my name's David Jones, and at the beginning of a really busy week, I thought we'd take a look at stock markets. We're going to have a look at the S&P 500, but it's just as applicable to the likes of the Nasdaq as well. It is a crazy week this week. Wednesday night is the US central bank decision, the Fed's interest rate decision. Thursday, there's interest rate decisions in the UK and the EU. And if that wasn't enough, on Friday, it's the non-farm payrolls, US unemployment numbers. So the potential for loads of volatility this week. Just a quick note, I normally do a live stream on a Tuesday evening. Because the Fed is coming out on Wednesday, I thought I'm going to slip it back one day. So this week's midweek live stream is going to be on Wednesday night at 7:30. If you're subscribed with the alarm bell notification pushed, you get a message off YouTube when I'm about to go live. The Friday live stream will happen as usual, 2:30 my time here in the UK. So just as US markets open and an hour after the non-farm payrolls come out. So it's a heck of a week. What's it going to mean for stock markets? Before we get into it, a quick mention for the newsletter I launched a couple of weeks ago. It's free of charge. Every week I talk about what's happening in markets, what's the hot market to watch in the week ahead. There's a trading tip in there as well. Last week's I think raised a few hackles, but well worth looking at, and a bit on my trading performance. If you go to the website jonesthemarkets.com, scroll to the bottom of the page, you can sign up for the newsletter. I'll put a link in the description of this video, and I'll also put a link to last week's newsletter so you can read that as well if you weren't on the list already. Right, let's get into it and talk about what might happen with stock markets this week and looking ahead to that interest rate decision. So Wednesday evening, my time, UK time, we've got the latest interest rate decision from the Fed. Broad expectations are that we are going to see US interest rates go up by 0.25%, so 25 basis points is the expectation. That is what markets and investors, our analysts are expecting. Now, this is a slowing of its pace of interest rates by the Federal Reserve, which some would see as a good sign. Partially, of course, because we have seen inflation slowing in recent months. You know, I've said quite often on the live streams, I wonder if we are now past peak inflation. You know, the raising of rates is a pretty blunt tool to try and cap inflation, and because, you know, obviously things are much more expensive than they were a year ago, but we're not seeing inflation gaining at the same rate that we had seen over the last 6 months or so, and the Fed is perhaps slowing the pace of rate increases. As is often with these announcements, the important thing to watch, probably not so much the decision, if it ends up being as expected, but the press conference and comments afterwards about how they see the economy and where they might be going for rates in the future. So normally guaranteed a fair chunk of volatility on these sort of announcements, and I'll be online after the announcement comes out, doing the live stream, and we'll have a quick look at markets. So let's talk about markets. Let's talk about the S&P in particular. So the S&P 500, the broader US stock market index, had a good day on Friday of last week. We saw it trade to its highest levels for the year to date. So 2023 highs for the S&P on Friday, actually pushing this market back to where it was at the beginning of December. But the trend on the S&P and the Nasdaq has been down since at least January 2022. For the S&P, the Nasdaq, we saw that peak in, I think it was November 2021. So we have seen rallies by this index up to this area since September, and ultimately since September, over the last 4 months, it's ended up being something of a graveyard for the bulls. The market has run out of steam up at these levels. I think 4,100-ish is the level I often talk about on the live streams. We'll have a look on the charts in a minute, take a look at things in a bit more detail. So is this going to be any different? You know, are we going to see the market fall again? Or actually, will we see it break? I think we will know either way during February. Because the difficult thing here, of course, is to know, well, what is priced in by the market? If the Federal Reserve raises rates by 0.25% on Wednesday, that's not a surprise. That won't be a surprise if they do either side of that. that is going to be a surprise. So it can be difficult to second guess market direction over these announcements because so much is known in advance. And we tend to see the market performing a bit like a headless chicken when these announcements come out, not sure if it's good or bad. So it can take a while to settle. Anyway, we'll wait till Wednesday to see what the market reaction is. Ahead of that, what are the big levels to watch? What needs to break to change this trend? Let's jump onto the charts and take a look at things in a bit more detail. Let's take a look at this S&P then. Let's go back in time to the coronavirus lows, March 2020. Back there, the market was at 2206. Then, of course, saw the rally back up. The peak, fresh all-time highs just at the beginning of January 2022, just over a year ago, of course. And here we are now. Let me zoom things in to just capture this trend since a year ago. So this is where we are. This downtrend has done a good job of holding any strength. We had the rally up in August of last summer, towards 4,300. Market ran out of steam and the downtrend textbook continued and then hit fresh lows for the down move in mid-October of 2022, down around 3,500. We then saw the market bounce back, but again, despite this very brief spike, I think that was on inflation numbers from memory in mid-December, brief spike through the trend line, couldn't hold it, sells off again, but doesn't make a new low. So if you were looking to construct a positive argument for the S&P, the fact that after the latest touch, the downtrend line, we haven't seen this market take out 3,500. That's perhaps the first sign within this trend. Are things starting to turn around? And then over the last week or so, we have seen this trend line break. But as I often say on the live streams, I'm always inclined to not believe the first break, to think, is it a bit of a false break? So the level for me to watch, let me just highlight this. So I've given it a bit more room, but I'm going to say 41.55. So it was a major high mid-September. It was the high before the market lurched to a new low for this downtrend. That spike on the last inflation data couldn't get through 41.55. So there we go. That's my line in the sand. If we see the S&P break through 41.55, then perhaps this is now finally the end of that downtrend. So a really interesting week. We did see it, last Friday, traded up to 40.90, and we've seen at the start of this week it back off quite a bit. I'm recording this before the official open, so this is out of hours trading is what we can see here. I am expecting perhaps a somewhat strange few days for the market, for all markets this week actually, before we get that interest rate decision. But for me, that's the level to watch. If we look on the shorter term chart, then absolutely that trend is still up. We've got the lows. I've picked up on the lows from the 6th of Jan to the beginning of this year. That trend's still up. We've got quite a bit of support coming in ahead of 4,000, bigger support coming in ahead of 39.40. So from a short-term point of view, if that's the time frame you like to trade, and I do look at the hourlies for my own short-term trading, I talk about it on my trading course. I've got two approaches, looking at the dailies, looking at the hourlies. Go to the website to find out a bit more about that training course that I run. But that trend is still up. So we do have conflicting trends. We've got a 1 month trend pushing higher, and we've got the bigger trend from Jan of last year, for me, still down. So I think it's going to be a really interesting February. For those of you who are fans of the RSI, we're back on the daily chart now. You can see that that hourly trend line is still in there. It has blipped up near overbought over the last couple of days. The last time it got to this level, actually, we've got to go all the way back to the summer, pretty much, of last year, the last time the RSI went overbought. But the market did carry on pushing higher for a little bit. But we are at an extreme on the RSI, so we'll see. So for me, I'm quite happy to sit back. Let's see what happens this week. Do we see 41.55 broken? I would still be tempted to be a seller into strength, I must admit, depending on what time frame I'm trading. On the short-term chart, on the hourlies, dips back to this trend line, look like an opportunity. But if we get a surge up and a failure, it's quite an interesting medium-term trade. On the subject of trading, let me show you what I'm trading at the moment. I've got 3 open trades at the moment. I did one today. So I've got a bit of a mix of trades at the moment. I've traded this £4,000 account as part of the trading course I run. It's real money. It's my money I chose £4,000 because I thought it's a number we can all relate to. Some may have less, some may have more, but £4,000 is fair enough. The best performer at the moment is sugar. So I've been in the sugar trade since the 19th of Jan. So each of these trades has a £100 risk. So the trade on sugar has done pretty well. Let's take a quick look at that chart. So this was based off an hourly chart. So we'd seen the price of sugar late December fall, bounce back. I thought it had broken out of the downtrend. I bought it on the 19th of Jan, so somewhere in there. Moved slightly against me. Shows you the benefits of being patient. Finally, last week, the price of sugar started getting a move on. So I've got a trailing stop on that one at the moment. So it's doing well at the moment. It's making 1.6 times the risk. I've done the euro trade. I've been in that for a while. That's been a bit of a nothing trade. Been in it since the 23rd of Jan. It keeps flip-flopping around from positive to negative. Again, I think when we get this interest rate decision on Wednesday, we might have a bit more volatility and a bit more of a resolution as to what's going on with the US dollar. And the latest trade, I did it just a couple of hours ago actually, but crude oil. So I bought crude oil this morning, Monday, at the time of recording. So it's up a bit at the moment. Let me show you the reasons for doing that. So again, for me, that was a short-term trade. The oil market on Friday did hit a 5-day high. Then it absolutely tanked in the afternoon. So I bought in here this morning and I just wondered, has it overreacted? I've got a stop loss in place. There's not much for me to do with this trade until it gets a move on, but an interesting market for me to watch in the days ahead anyway. And this is what my performance looks like on this account. So the last 30 days, I've booked £767 of profit. That's out of 18 different trades, 13 winners, 5 losers. If we look longer term, back to when I first started trading this account, the 90-day booked profits is 2,331. I have to say, of course, past performance is absolutely no guarantee of future performance, but a cracking return. I was always confident, obviously, I was going to make money over the 3 months, but I just didn't think it would be on this sort of scale, from a percentage point of view. It's in excess of 55% return since I started trading this account right at the end of October, beginning of November. So to find out more about that, there's a link to the performance. I talk a bit more about the performance on my website. There's a link in the description for that. But back to our S&P chart, big trend since January last year, down. Short-term trend since January this year, up. 41.55 is a level to watch. Let's see what happens over this interest rate decision on Wednesday of this week. That's it for the update on the S&P. Don't forget, go to my website to sign up for the newsletter. The link to the latest newsletter is in this description. We'll see what happens. I'll do the live stream on Wednesday after the announcement has come out. We'll see what markets look like then. But for now, for the S&P, we'll leave things there. Good luck with your trading.